Hey, it's Sasha Evdokov. It's March 20th, 2014, and today we're going to discuss some penny stocks. I know a few of you guys have been asking about this penny stock stuff, so after I do a quick little recap on some other movers and things that are happening, we'll go into some penny stocks, and I'll give you my tidbits and thoughts of what to do if you want to trade penny stocks or the low dollar amount stocks. So with that being said, let's move forward and let's just take a look at some of the stocks that have been moving or acting or things I've been watching. The S&P and the Dow Jones, nothing really exciting. It's kind of doing the same thing it was doing. It's holding up on this 16,000 point level, and it's just been isolating here this last week. I would have expected it to drop and continue here lower down to this 15,356 level, maybe to retest it, but so far it's been kind of stable here over this last week, and it might come back here and test 16,500 and then roll back over. So we'll see. Right now it's just kind of playing around in that region, so nothing really to get excited about. So for now, I'm just going to show you a few stocks and things I've been watching, and we'll go into penny stocks here in a minute. So looking at some stocks, I've heavily been looking at CMG, and I talked about this one as it did this pullback right here. It's a classic move where it pushed through higher off this consolidation pattern and then retested it, and then it powered higher. And you can check my Twitter thing. I've been posting on this one for a couple days, and you know, I was watching it for it to break right here. This is the descending pattern right here, and flag pattern, and it's typically a bullish pattern. And the same thing we've been doing with actually BAC, which you can see here's the pattern. We had 2 days of up right there. So we had this descending pattern, breakout, descending, breakout, and that's what stocks like to do. And each breakout has been on higher volume. So Bank of America here, we had 164 million shares versus on some of the pullbacks here 100 million. So it's definitely about 50% or so higher, or more so. So, but getting back to CMG here, this run, if you would have captured it, you know, if you would have took the run, it's a 26-point run. So think about that for a second. $26 run in 3 days. Yes, it's a more expensive stock. It's about a $600 stock, but I want you to keep that in mind when we go into discussing penny stocks in a little bit. So taking a look at some other ones, First Solar right here, we had this descending trend line, huge pop on volume yesterday, and then also today. So we had about a 11-point run on First Solar right here. So it did a classic move break on the 60 and just continued higher. So it's been acting pretty well there. Facebook's pulling back. It's healthy for this one to pull back. It's had a nice long run since about the $30 level. So we'll see how far back it'll go. It's just pulling back on lighter volume actually. So it might bounce here soon. We'll see. Time will tell. So maybe at the $65 range, or maybe here at the $66 range, it might bounce. Now we do have this gap over here, this over in the $59-$60 range to the 55 range. So that's an open gap that still may suck the stock in a little lower, but we'll see. Priceline again, bouncing here, kind of doing what the market's doing. This stock, since breaking out on this line right here, it's had a pretty solid 140-point run, pulling back about 50%, and it might continue going higher because that's what stocks do, just like in CMG, you know, breaking out, pulling back, okay, retesting this level right here and popping higher. So if you look at Priceline, it's possible it's breaking out, pulling back, and it might pop higher again because everything else looks fairly healthy on this one. It's just a standard pullback, and that's what happens. Netflix continued to pull back again with the market as this one went, and it tried to pop higher today, but it sold off towards the end of the day. So when stocks do this, it shows a little weakness to me. You know, if it continued higher at the end of the day, it would have shown some strength. So again, something to keep in mind. In this one, Amazon, classic. They tried to push it higher. They meaning the big institutions and the big guys. They wanted it to go higher the last 3 days, and we had doji after doji after doji. Kept trying to push it, and then it rolled over the other day, and then it still continued lower today. So I don't know if this one's got the juice yet to make it higher. It could go higher, but you know, the signals aren't there for it to show some strength yet. It might come in soon. Who knows if one of the big guys decides to jump in with a couple $1 million, and we'll see what happens. Tesla. Gap is being sucked in again. You know, the stock's just consolidating. Got this triangle pattern going on. You know, when the stock runs this much, this quick, you know, it needs time. It needs time to breathe, needs time to digest, and, you know, let it do its business, and then you can pick it up later. When stocks do this run right here, it's pulling back, and after they break these channels, you need to step aside, and you'll start seeing these soon that I talk about in the penny stocks. And this is why I'm mentioning these stocks to showing you a few different things to look at, because I'm going to go into it with some of the penny stocks here in a minute. SanDisk again. Here we got our bull pattern almost coming in, and how far can it run? Well, take this line, move it there, and that's where it might run. So that's a predictable possible outcome. So this one's doing well. It broke out here on good volume, and it's been acting well the last 3 days. If you didn't get into it on that first day, then just be patient for maybe a pullback like one of these here that happened. That's what you'd have to wait for again, or like one of these, because otherwise you're getting into it late. You're entering it right at the pullback, and that's what most people do, is they're entering it high right at the pullback, and then the stock pulls back and they get out. So that's how you lose money. All right, so getting into some penny stocks, and before we get into penny stocks, I want to ensure that I definitely don't promote penny stocks. I don't think it's the wisest idea, because they don't trade a lot of shares and insight. They don't have a lot of volume behind them. And when they don't have a lot of volume, that means the stock can whip around fairly quickly by an operator, someone that moves the stock pretty easily. So for example, if we have a stock like this one right here, EGT, you know, this stock is about, what, 87 cents right now. And today we had 12,000 shares that were traded in the volume. So 12,000 shares basically is telling me that if I put in $10,000, $12,000 into this stock today, I could move this stock easily. If I put another $10,000, I would move it again pretty quickly. You know, even on the large days, you had 60,000 shares. So if I put in $60,000, you know, into this stock, I would move it huge. And that's not a lot of money when you talk about stocks. You know, that's why the big institutions can't trade these. So for me, when I think about this, is you can put in $1,000 and get 1 or 2 point gains on these stocks, which can be manipulated. And typically, most of them I would short to the short side rather than buy into their strengths, because very few of these will even break out of their $5 or $10 range. You know, most of them are $5 or less. But most of them you want to short rather than buy into their hype, because they're crappy companies, they're BS companies, they're not worth much, and they're cheap for a reason. That's why the big money don't play these companies. They need liquidity. So for me, if I just spent 50 grand on this, you know, I move the stock way too quickly. So you need to be cautious, and when you choose a penny stock, you got to make sure you have the volume and the juice behind it. So with that in mind, let me go over a few different charts, and maybe it'll give you some insight of looking into penny stocks if you choose to trade these stocks. Because me personally, the way I look at it is, as your account grows, you're going to want to trade larger amounts, and when you trade larger amounts, these stocks won't work anymore. So if you want to put in $200,000 into one trade, this stock would whipsaw all over the place. You just, you know, it would just move it. That's why the big guys, they get huge movements. I mean, look at CMG, okay? Even if you traded, let's say, 10 shares, okay, or even one share you would make, for $600, you would make, you know, a $20, $30 run. Let's just say you traded 10 shares. Well, 10 shares would cost you $6,000, okay? 10 shares, you would make $300. For these stocks, these EGTs, you know, to make the $300, you know, even if you bought 100 shares, you'd have to go up a whole nother $3. And where has this stock been? You know, where has this stock been? It hasn't moved $3 in years. Like, you'd have to hold it for a couple years for it to move $3. You know, so typically people that trade these stocks, they need a lot of volume. And the problem, what I said with volume, is there's no liquidity there. So if you understand that and you understand what's going on, let's go into some of these charts. So here, looking at this JRCC, you can take a look at this. If you were waiting patiently on this one, you could wait for a trend line where I marked it up there or up here to go short. Why do I say short? Because these are crappy companies. They're nothing amazing. If they were good companies, they'd be higher in price. People would want them. Okay, you can see the volume kicked in here. We got 3.4 million shares. That's only $3 million traded. That's traded. That's nothing. Okay, so here you go short. Okay, and you could hold it for a day or two, and then you get out. I wouldn't hold these things for too long. If you held it over here, okay, great. Maybe you'd hold it for a little longer and use this as your stop, okay? And then you continue to peel some off. But already it's 62 cents. The volume is dying out. So in order for you to buy back your shares, you'd pop the stock up a little higher. Because when you're short and you buy back the stock, it's going to pop it back higher. Okay, look at IKAN. Okay, I don't know these companies or anything. I'm just pulling them from some charts that I pulled for you guys. Okay, again here, create like a little line. It's been doing it for a while. You watch this line. It broke here. Here was huge volume. The volume before that, you can't even see. 20,000, 70,000. You know, $70,000. That's all. That's all you need to move the stock. That's not a lot of money. You know, so here, when it broke, okay, we had 2 million shares traded, you know, and that was quite good. So decent volume. So you could have shorted, let's say, 2 million. I would never trade over 5 or 10% of the amount of shares that are being traded. So if it's 2 million shares here, or let's just say the previous day, 195,000, I wouldn't trade more than 19 or 20,000 shares, because then it's going to be a problem getting out. So never trade like a full day's amount of shares. You're just going to move the stock. You're going to own too much of it. So here, you know, you would short the stock, and as it continues to go down, sell a little. But again, you're making 31 cents. How low can a dollar stock go, right? Whereas if you take a look at, you know, Tesla, if you short it here at the highs and then you pull back on a triangle, that's a $28 run. You know, even GMCR, I talked about this one. You know, here, shorting at the highs, little run, 15-point run from 124 to 105, okay? All right, so that's this icon one, okay? So again, think more shorting rather than buying when it comes to these things. PLCC. This is what I wanted to show you, what you want to avoid. These kinds of companies, as you can see here, they aren't even being traded on certain days. This is a choppy, messy chart. You don't even want to trade this. Look, we had 1,000 shares, 4,000 shares, 2,000 shares, 800 shares. If I bought 10,000 shares of these, this stock would jump so high people wouldn't know what's going on or what's happening. Granted, then it would be a pain in the neck to get out of it. But I'm just telling you, you don't want to trade messy charts like this, because there's no trades going on for months. Could have been halted. So don't even bother. Okay, let's look at NIHD. Okay, here, let's look at the weekly. This one, boom, long pattern. Short it here at the $4 range. Volume's picking up right here. You can see right there's a little volume. Sell short right there. So there's our trend line. let it continue do its run, and boom, you got $2-3. But again, $2-3, that's all you got. You got $2-3. It's a $4 stock, can't go too much lower. Okay, GCFB. Look at this one. No trades, messy chart. Don't trade these. RGDX. Got these off my note cards that I made for you guys. Okay, trend line here, you know, popped higher. You got these people that are thinking, oh, it's going to be amazing. The stock's going to go to $5, $10. I could be a millionaire. No, not going to happen. Rarely do these dollar stocks make it back. Okay, so boom, trend line. Watch that trend line break. Volume kicks in, light volume. You can see for these types of stocks, you're just watching for a mini volume pop, mini volume pop. You know, you're not always going to get these huge volume spikes or these huge volume spikes. Mini volume pop, breaks, short it, boom. You got your 63 cents. Put it in your back pocket, mailbox money, walk out. Okay, THIT. Okay, same thing here. Boom, surge. Pop, was it this one? THTI. No, THTI. There we go. Surge, huge surge. Okay, a huge drop. When these companies surge, typically they'll drop. It went from $1 to $2.79. $1.75 profit, huge drop. You want to short these puppies right here. When you see it at these highs, even here, you know, give it an extra 50 cents. Boom. And after a few days it'll come back. That's what they do. Spike, supernova type style, done, over, bang bang, out of there, and it's coming back. It's coming back probably at $1.14, you know, 30 more cents. Okay, we got ATEC. Okay, again, trend line, the break, little volume spike, short it again. Like I said, short it, and boom, done. Collect your profits, bam. I'm not telling you to short any one of these specific companies, obviously. I'm just showing you theories and concepts that you can use to make your own trading decisions. I'm not any investment advisor or any of those guys, so don't think of it that way. So trade accordingly. So here, this one, boom, break, volume pop. This one you could play it two ways. You could play it to the upside on the spike right here and get your $1.46 from here to there, and then short it again, boom, and get your next $1.06. Okay, so these kinds of things, it took a year for this one to set up, or 6 months, and then you can pull the trigger. So you got to watch these kinds of things. It happens, set some alerts. That's what you do. FCEL. Now this one I do want to mention. This is a $2 company here for a while, okay? And you can see the volume picking up. These are a little more healthier. Now when you see volume 68 million, 107 million, 46 million, these are safer. If you want to trade, you know, what do we say, 10%? If you want to trade 600,000 shares or 100,000 shares, fine. With these you can do that. You know, now you can put in 100,000 shares. You can collect 100,000 shares and move the $1, $2. You make your $200,000 in a day or two, couple days, and then the stock will sell off eventually. You got this bearish engulfing pattern, okay? Bearish engulfing bar, okay? That's what happens with these companies. You need to be prepared for the pullbacks. A $2 stock is rarely going to jump and hold its position. It takes time. This one's got volume picking in, and it's got volume coming down. So this one was more tradable than some of the others because of the volume, because of the liquidity. The other ones are more dangerous because they could have more operators. This one will probably have less operators because it had, you know, 2 million shares almost every day, even on the weekdays, okay? The weaker days. Okay, RDNT, the same thing here with this one. When it popped on 2 million shares, 1 million shares. More volume, more juice. Boom, here, trend line. Look at that surge, pop. Even if you got in second day, still got your 66 cents. 66 cents, that's all you got. Okay, if we talked about NVIDIA here, remember? Talked about this one breaking over here. Even this stock, if you wait patiently, you got $2 run versus 66 cents. You know, it's more likely these stocks will go than these penny stocks. You know, but you can still trade them. You can still trade them. TRIT. Again, no trades. So avoid it. Messy chart. Okay. ATHX. This one, again, $2.30. Waiting patiently. Waiting. Boom. Spikes coming in. Pops coming in. You could set it here as a stop. Let it go and see what happens. And then right here, you can see it's topping. You know, right here, it was playing around. Right here. It's coming down. It's testing it, not making higher. This is where you would short this bar right there, and it's going down. Okay, that's what I'm predicting with these stocks. Most of them, they come back. That's just the nature of them. Most of them, not all of them. Most of them. Here's another messy chart for you. See, it's all over the place. How much volume are we doing? 600 shares, 4,000 shares, 12,500 shares. If I spent $500, I'm gonna move this stock. $500. You know, a person that, you know, works as a babysitter can buy this stock and move it. That's how cheap these are, and that's how dangerous they can be. RADA, again, messy chart. Look, no trades a few days even. Look, cheap. 100 shares, 1,000 shares. Spent $1,000 or gave away my computer right here. Then this one would be moving. Well, my computer's a little more than 1,000, but you know what I mean. It's cheap stock. All right, here we go. NINE, again, messy chart. Stay away from this kinds of things. ASBCW, very messy. Definitely stay away from these types of things. And Zipper, okay, trend line, the break, huge volume, short it again, and there you have it. So what's the conclusion here? What am I saying behind these penny stocks? You need to be careful, number one. Number two, I'm not giving you advice to trade these because normally I say don't trade penny stocks. They will burn you most of the time. If you do trade them to the short side. Not to the upside, but usually to the short side. And I say usually. You need to be careful of what you're doing. Also, look at the previous days. Only trade about 5% of that. So if you got a stock that's only trading 9,000 shares, don't trade more than 300-400 shares at max. You know, even 900 shares is a lot. You know, 10%. If you're trading 10% of a company's daily trades, that's already pushing it. You know, that's why these big companies like the Amazons, they're trading, you know, 4 million shares, but 4 million shares, multiply that times $300. That's big money. Okay, if you're talking about, you know, a small company for 62 cents that trades $500,000, and you know, that's nothing. That's nothing in terms of stock market stuff. So play accordingly, trade them more so to the short side. And like I said, I don't recommend you trade penny stocks. If you want to, this was the video for it. This was what I wanted to share with you, but I normally don't recommend it. The principles and concepts are the same whether you're trading these penny stocks or these big flyer stocks. But like I said, if you got in at this stock at the right time, let's say at this break at 575, you know, and you had it run 36 points, you know, even if you had 10 shares, that's $360. You know, to make $360 on this stock, you need it to go up $3, $4, $5 if you had 100 shares. You know, if you had 1,000 shares, now you're talking differently, but 10,000 shares. But you can't always enter 10,000 shares. So I know I'm ranting about these stocks, but I just want to make sure you understand, number one, the dangers behind them and the risks behind them, and that it's a little bit more tricky. You need to know what you're doing. Now, yes, you can do it. I'm not saying you can't. You can trade them, but when your account is $100,000, $500,000, $1 million, when you're trading $200,000 and that's what you're putting into one stock, or you're trading, you know, $500,000 in one stock, you can't trade these companies. You will move them way too much. That's why when you trade like a Google, you know, you're trading a Google and you put in you buy 1,000 shares, you know, that's good money. You know, that's taking some huge money. You're buying 1,000 shares on Google and you have it run 200 points. 1,000 shares times 200 points. Do the math. You know, you're making millions right there on that run. Okay, so that's the main difference. That's the big difference, and that's over a year. That's it. That's just a year. These penny stocks, they don't move much. So I just wanted to give you some thoughts. And like I said, I don't promote the penny stock thing. I would rather see you start trading even stocks that, you know, move like a Nike, a slower movers but more expensive, because you know, you get into them right here when they break correctly, and you know, you ride them for $4 or $5, $4 or $5, you know, or a price line. You get, you know, 20 shares, 10 shares, you know, 5 shares. You get 5 shares. 5 shares, 150 point run. That's a $700 gain right there. Okay? 5 shares, 150 point run. Do the math. Think about that for a second. Think about that, digest it, and listen to what I'm saying. And listen to what I'm saying, and then what does that mean to you? Okay? You can still trade the penny stocks if you want. You can trade the big stocks if you want. But listen to how this applies to you, because it's not about me. It's about you. It's about taking your trading higher. It's about making yourself better, so that way you can continue to evolve. Sorry about the ranting. I just wanted to make sure I was pretty clear on the video. I thank you guys for watching and sticking through me. I hope this was educational and beneficial, because I know quite a few of you asked me about penny stocks. So hopefully this was at least helpful and some good insight. Trade them well, trade them right, stick to your risk and money management, do what you enjoy in life, contribute to other people, and more importantly, go out and live your life. Thanks again, and I look forward to seeing you next time.